And welcome back. As we mentioned earlier this hour, the Dow Jones Industrial Average experienced its second consecutive day of steep losses, briefly plunging nearly 1,600 points before settling down around 1,100 points, wiping out most of 2018's gain. This after going on a record run the previous months. The Standard & Poor's 500 index, the S&P 500, as most of us know it, the benchmark for most professional investors, it was down 2.7%. The Nasdaq Composite fell about 2.5%. The Russell 2000 index of smaller companies also down 2.5%. Now, experts have been saying that the bull market wouldn't last forever, and now it appears that some of them might be right. Is it time to panic? I'm guessing the answer is no, but still we want to bring in an actual expert to talk on this. Here to weigh in on this is a former member of the New York Stock Exchange's Management and Executive Committees for 10 years. His name is Rich Torrenzano. He is also the chief executive of the Torrenzano Group. So, Rich, this is, I guess nowadays you see a triple-digit number in the stock market down. You're not all that shocked. This has been something that a lot of experts have been talking about for a long time. Do you see a long-term market correction here, or is this something we can expect for the next couple of days?
Well, nobody really knows, but I think you have to take a step back and you have to say what happened, why did it happen, and what you should or should not do about it. I think we all know what happened. The market went down, but I think if you put that in some kind of perspective, the market's down about 8.5%. Since the Trump election, the market's up 40%, so we're down just above 30% since the election. Secondly, we've had 113 of these corrections since World War II. I was on the trading floor of the New York Stock Exchange on October 19th, 20th, and 21st, 1987, when the market was down 23%. And at that time, a lot of people thought it was the end of the world. Well, it was not. And every time we've had a correction or a market slide, markets have come back and gone much higher. I think a couple of things happened the last couple of days. I think there were a ton of margin calls. I think there was a lot of institutional trading. I think we're testing the new Fed chairman a little bit. Mario Gabelli said something very insightful last week, that there's a shortage of liquidity on the sidelines, so people are not prone to be coming into the market at these levels. But I think you have to determine if you're an investor or a speculator. And if you're an investor, you're in it for the long term. And if you're a speculator, you're probably going to get hurt.
Right. So investors might be a good opportunity to buy. Market's down a little bit. You can throw some more money in there and watch it come back up. Now, the White House said today that the long-term fundamentals of the economy are still very strong. Do you agree with that?
Yeah, I'm an investor in this market. I believe in the long-term fundamentals of this American economy. You have very clean balance sheets on most American corporations. You still have low interest rates. You have very good earnings that have been coming out, and I think will come out for some time. You have 17-year lows in unemployment in this country. You have the new tax bill, the new tax incentive, which really is just beginning to take hold as people are seeing more money in their paychecks and seeing those bonuses, which they're going to use to invest in an array of different things that they may wish to invest in, from child care to education to purchasing a new television. So I think that's going to take hold a lot in the next couple of months. And if the Democrats can get their act together, we're probably going to see an infrastructure bill of something around $1 trillion, which will create enormous numbers of jobs, not only in infrastructure, but in accounting and all sorts of aligned jobs. So I'm very positive about the U.S. economy. I think, my great-grandfather, who was Italian, used to talk about agita. Agita is something as an upset stomach, and I'm sure a lot of people had agita these last few days. But I think if you look at the long term and you look at the underlying issues in the economy, which are very positive, I think, and you remain an investor and not a speculator, you do very well in the long run. As a matter of fact, I'll say today that I think, barring an international incident, if we're sitting here at the end of this year, the market will be much higher than it is today.
That's quite a prediction. My next question was, after this correction, how historically likely has it been to see a quick surge afterwards? A correction to the correction, if you will.
Yeah, a real correction, according to economists, is 10% or thereabouts. We've seen about an 8.5% correction these past few days. It could go as high as 12 or 14. Nobody really knows. And if you want me to predict for you, as soon as I predict, I'd like to sell you 2 bridges. Nobody really knows where the market is going. But I think you have to look, you have to take a step back, take a deep breath, and say if you are an investor and you have a good portfolio, you're looking for the long term. If you have concerns, you should seek a professional advisor, and they will be able to help you with that. But if you're an investor and you believe in the American economy, as I do right now, we're going to see a much more robust market in the months and years ahead.